Crypto taxes, now is the time of year. We're going to be diving into a little bit about what that might mean for you when you're doing your own tax planning and tax prep. It's going to be a good one. This will get you guys ready to get into the season and also maybe ready for even next year and planning even better. So make sure and stay tuned. My name is Paul Barron. Welcome back into Tech Path. Joining me is David from Coinledger. And David, you've been here before, so welcome back.
Yeah, it's always good to be with you guys. Thanks for having me back, and excited to talk taxes and crypto. It's kind of that time of year again.
It is. Well, a lot I know has happened with Coinledger over the last year. You guys went under, kind of the brand refit, which has been great for you guys. And then you've launched a lot of new products and services. We'll show a little bit about that today. And we're going to get into some really good tax questions when it comes to crypto. So diving into all that. Anything new over at Coinledger that you can kind of chat with us about?
Yeah, I think the biggest thing is kind of our push into the real-time portfolio tracking space. So, historically, Coinledger's been a tax reporting first product, and it still will be. But, now we're rolling out this completely free portfolio tracking product that's going to aid with the tax reporting. So that'll be live in the next few weeks. If anyone wants to be a beta tester for that, shoot me a note, and we're already in private beta with that product. But outside of that, continuing to add integrations, make the product simpler to use, and make crypto tax reporting just a lot simpler for folks in the space.
Very cool. Just to let everybody know about integrations, if you go to their website and you just click on that integration tab up there at the top, it's going to break them all down for you. I'm in the DeFi section right now. So obviously all within that, some of our favorites there, Phantom, OpenSea Base. Within DeFi, I want to kind of start with that for a second. NFTs, and also we'll get into swaps as well, but I want to talk a little bit about NFTs and how those are handled when you're selling an asset like that. Is it, kind of give me an understanding of what that might mean for someone who does have a large NFT wallet right now. Do you guys track all of the different platforms out there for NFTs?
Yep. So in Coinledger, it works very similar to other crypto assets in that, our integrations with Ethereum blockchain, Solana, all layer 2, we'll pull in any NFT assets that you hold in your wallets and any transaction history that you've had with NFTs. And we'll calculate for you your gains, losses, and any income that you've incurred from your NFT transaction history. And so, you can see these integrations. So if you've interacted with these protocols, Coinledger's automatically doing kind of the heavy lifting, that number crunching to actually calculate what your gains and losses are, which of course is what you need to report on your taxes.
Sure. All right. So within that, on staking, if you think about, let's just say I'm holding Solana, I want to go over here and I'm running this within a staking pool within the Phantom, wallet. That's a DeFi wallet, but I'm out there staking this. How does that happen? What type am I taking gains at the time in which those rewards are being given to me? What is the process there?
Yeah. So first on the taxability side, so staking within crypto, whenever you're earning staking rewards, right? The amount of token that hits your wallet as it gets dripped to you. Now, as everyone knows, there's different mechanisms for staking. Sure. But let's just simplify it, right? Let's say I'm getting 1 Solana per day. I'm actually realizing what's known as ordinary income at the fair market value of that amount of Solana each day it hits my wallet. So let's say 1 Solana is worth $90. I'm incurring $90 of income per day if I'm getting one per day. And so you need to report that fair market value in US dollar terms, throughout the year. And so
even if you're not selling it.
Exactly. That's the one.
The value is coming over to you. Okay.
Yeah. For staking, for mining, for if you earn crypto from like a job, you're earning ordinary income. That $90 for that 1 SOL becomes your basis in the asset moving forward. So you realize $90 of income on that day. And let's say you sell that 1 Solana a week later for $110. Then you'll book $20 of capital gain because it has increased in value.
What happens if the asset goes down? So you realize, let's say January 1st, you got that 1 SOL, which was, let's say $100. on January 10th, I sell it and it's at $90. So I've taken a 10% loss on that asset or that, that income. What happens at that point? Is it the time in which the transaction occurs, or is it the time in which I report the transaction to the IRS?
So in that instance, you would report $100 of ordinary income, and then you'd report a $10 capital loss. And so
Capital
those
gains
would
loss.
net out against each other, and you'd incur $90 worth of income if that was your
Perfect.
only transaction for the year, all things
Right,
considered.
Sure. Yeah, just making it simple for people to understand
Exactly.
on how to deal with this. Let's get into airdrops, because airdrops is this is huge now. We've got one of the biggest ones happening. Matter of fact, on the Solana network right now, as Jupuary is going out. So Jupiter Exchange is going to be doing a lot of airdrops, but we've seen a ton happen in 2023 as well. How are airdrops valued? Are they same kind of scenario where you're taking that as ordinary income?
Yes, and this does vary country to country. And here in the United States, it is ordinary income at the fair market value at the time it hits your wallet, or at the time you have control over the asset. So exactly the same as staking, ordinary income, and that becomes your basis in the asset moving forward.
Wow. So I'm thinking I get a big airdrop and it puts me over a tax bracket because let's say you're at the tax bracket window and you get an airdrop, which you don't control. You just get that. It would potentially put you into another tax category if you were right at the bubble on, wow, that would be interesting. Huh.
Yeah, and this is actually a good thing to know, and where some people can get into trouble, as we've seen historically, a lot of times airdrop tokens can, drop in value significantly. And so you need to be cognizant of how much income you realized when you took ownership of the airdrop, because you face that tax bill regardless of what happens in the asset moving forward.
Yeah,
and
it's
so
just income.
What I advise is make sure you have enough to at least cover that tax bill. So maybe you want to sell a small portion at that day to make sure you can cover the tax bill, because we have to pay taxes in US dollars and not the amount of the asset that you incurred. And so it's always a good practice.
Yeah. Let's talk about swaps, because swaps are a thing now that we're starting to see a lot more engagement on, at least on our channel. A lot more people are now in DeFi. And I think in general, if you look at what's happening within, I will just say, the Phantom wallet probably is one of the most easiest functions in terms of swap outside of Uniswap. But how do you deal with swaps right now from a standpoint of taxes?
Yes. So similar to trades, in that anytime you're disposing of property, and cryptocurrency is classified as property, you're incurring, as we've mentioned, a gain or a loss on that property, depending how it's fluctuated since you originally acquired it, right?
Okay.
So when you swap SOL for another token, it depends on how the value in that SOL has fluctuated since you originally purchased it. And so you need to track what's known as your basis, which is the original value of that asset. And then whatever you swapped it for at the time you swapped it, that's its fair market value. And that difference between your basis and the fair market value is the amount of income you're realizing on that swap. Now, again, you can calculate this stuff by hand, or you can use stuff like Coinledger, which is automatically going to retrieve all of the fair market values at the time of these swaps, completely automated.
Very cool. Do you guys also track down all those service fees? So the exchange fees, the swap fees, the slippage, all those kind of things that play into this. How are those tracked, and how does that get applied to basically your tax report at the end of the day?
Exactly. So any fees that you're incurring while transacting, they're in a sense tax deductible, meaning they're either adding to your basis, which is increasing that cost, or they're deducting from your proceeds of the asset that you acquired. Simply put, it's reducing the amount of taxable income you're incurring. And so Coinledger is built, our large blockchain engineering team decomposes all of these protocols and classifies all of these gas fees, transaction fees for you, and we properly tag them into the transactions that you've incurred. And so by using Coinledger, you're taking advantage of those fees to lower the amount of total taxable income that you'll have for the year.
Yeah. I'm kind of curious, do you guys currently track the fees across the industry, much like what we are able to see on different reporting mechanisms out there, whether it's ETH or Solana or Avalanche, others within it, the ecosystems? Are you guys tracking that as an industry, looking at where some of the fees flow is going? I'm just kind of curious in the sense of being able to really see where fees are truly being applied across these different blockchains. You guys do anything like that?
It's a great question. We have all that data. We don't have any like public facing
Man,
dashboards built
you need a
on top of that
dashboard right
data.
there. That
But
would
we
be
do have
great.
it. We have the data on like where are people actually incurring fees on what
Yeah,
blockchains and what protocols.
interesting.
With the hundreds of thousands of users that we have. But maybe we should build something to show
There you
where
go. I
fees are.
like it. Well, I mean, because a lot of people that could make for a bit of a decision process on when you're,
Mm,
doing certain transactions where you might swap with, and also maybe
right.
even especially when you go into cross chains. I mean, when you're going to Solana to Ethereum, which you can cross chain inside Phantom. I know this is getting complicated for some people. We'll make it very simple, but the point is use Coinledger, and this helps make it a lot easier to get a lot of these things done.
Exactly.
I also want to talk about the idea of new tax regulations. So the IRS has they've been releasing almost, it feels like monthly, some new update. And I noticed you guys gave tax guides here on your website, and you've got, oh gosh, so many countries here now. So this one was done back here just in December. Is this the full tax guide that you would say, hey, go download this to get your frame around what's happening in the US right now?
Yes, just go to that Learn tab on our website. There's the tax guides tabs, and all of these are up to date. You can see we refreshed all of these here just back in December, and they're completely free. It's going to cover. It's pretty in depth, right? Any question that you could likely have about crypto taxes for your country, these guides will cover. So definitely would recommend taking a read through these if you have specific questions.
Yeah, we had Miles on the show last year, so he was
Mhm.
he was there on the show talking about some of these points. So that's great. There is a lot here. I went through quite a bit of this over the last week, just kind of getting preparation. I like the fact that you guys go into the normal IRS guidelines around taxable income, all those kind of things, because obviously this is just another asset investment. This doesn't take any kind of special awareness. It's just like if you think of it like a stock,
Right.
you're going to have wins and loses, and you're going to have an opportunity there, and you just have to understand how to report it all. The problems is that with crypto, it's so dispersed.
Correct.
There's not so much that's centralized, so that is a big deal. Now, in 2022, there was a big movement toward bot trading. We had this conversation last year, and that presented a big problem for a lot of people because they had thousands, if not tens of thousands of transactions that came into that place. Has that been a trend in 23? And have you guys done anything in that area in terms of bot trading?
Mhm. Yeah, we're definitely seeing just at a higher level number of transactions for our average user tick up, which of course, the way our pricing works is transactions based. And so I remember talking with you about this last year,
Yep.
for bot traders who are doing potentially thousands and thousands of trades through their bots, their tax reports can get expensive. So we actually are working on stuff around micro transactions. Let's say you're getting like 5 cents in staking rewards a day from various places. We are working to make it cheaper and more affordable to get your tax reports from us.
Okay, cool.
But in terms of just what we're seeing, we are seeing just the amount of transactions for the average user continue to climb year over year, which is healthy. It means that people are finding more and more uses for crypto. And I think we'll continue to see that climb.
I notice you guys have, in terms of the key areas around exchanges, I think a lot of people are doing this. If you're using a Coinbase right now, Coinbase delivers us kind of a little bit of a pseudo report that we've got. How is that ingested into your service? What kind of things do you guys bring to the table that Coinbase doesn't bring to the table, in terms of a ability to really analyze your position?
Yes. So Coinbase is great, obviously. Their tax reports will be accurate if you only use Coinbase. Like that's all you're on, right?
Right.
Now, if you have your own cold wallets that you're transferring into and out of, if you're in DeFi, if you're on other exchanges, if you're moving crypto at all on or off of Coinbase, that's where their reporting breaks down because they're only reporting on the activity that's happening within the Coinbase walls, right? Now,
All right.
Coinledger, right, we're integrating with all of your platforms, all of your on-chain activity, all of your cold wallets. So we're
Yep.
stitching together all of those transactions. And so that's pretty much how it works is Coinbase's tax reporting is going to be accurate if you're solely on Coinbase. People are using Coinledger for
Yep.
many connecting to different wallets.
I want to walk through a scenario that plays out, or at least I see it play out a lot with some of our own SaaS members that always are asking questions in our private member group. One thing is, let's say they go out, they buy Bitcoin, $10,000 worth. They're holding it let's say in Coinbase, and then 2 months later they decide I'm going to go ahead and put that on a cold storage wallet. So I take it over to a ledger, put my 10K of Bitcoin, it's sitting over on a ledger. You're ingesting both Coinbase and Ledger, all right? So it looks like it's a transfer when in reality it's just an asset move. At the same time, maybe I say, okay, wow, Ledger had some problems. I'm going to take that and I'm going to move it to Tangem. It's a new wallet. Okay, so my Bitcoin is basically just moving around. When you ingest all of those wallet data points, is this looking like it's new income, or does it go to the blockchain and follow that transaction all the way through?
Yes, the latter. So Coinledger is not treating any transfers of your assets as income because it's not income, right?
Right.
It's just like it'd be like moving a $20 bill from your right pocket to your left pocket,
Yes,
right? You're not
exactly.
incurring any income. And so Coinledger is automatically tracking all of that, and it wouldn't be, double dipping on income that you didn't actually incur.
Yeah. Okay. So cool. Because that's been a question for a lot of people just trying to figure out, well,
Yeah, it's a common confusion point too.
they
And
think
this
that it
is
looks
something
like
that will
income.
trip people up from Coinbase's tax reports and other third
Exactly.
parties is
Yes.
they oftentimes treat transfers out of their platform as disposals, which
Right.
will book capital gain, even though it was actually just you transferring the asset to another wallet that you have
Exactly.
ownership over.
Yeah. All right. Well, cool. Then that's solved with Coinledger as well. All right. Let's talk about we get audited. The new check mark on everybody's tax return this year most likely is, did you sell, buy, or dispose of crypto? You're checking that mark, and something, whatever the case may be, you do get audited. What kind of things do we need to be prepared for, in terms of documentation to deal with something like that?
Yeah. So if you ever get audited, they're likely going to ask for, and if they're specifically focusing on crypto, they're going to ask for any, wallet addresses that belong to you. They're going to be asking for, records from all of your centralized exchanges. And then they're going to be sifting through all of that transaction history. They also will likely ask for bank statements, right, that showcase
Right.
purchases fiat to crypto. And so you should be ready to have all of that. Now, if you've used a platform like Coinledger, right, we have all that documentation for you. We keep an audit trail that's, will be persisted throughout your account forever.
Perfect.
Which is just a detailed report showing how every single calculation was done, the source of everything. But yes, that's what you'd expect. And, being audited is
How
not
long do you
fun.
guys keep that? Because that's I think it's a 7 years. Is it still 7 years?
Mm-hmm.
Right now?
So the iris window is typically 3 years unless they find like gaps. And if they go in for 3 years and find more, then they can go back to 6 years. And Coinledger, that will be on your account forever. So if you pay for one of our tax reports, that audit trail is available forever.
You got it. All right, cool. Let's talk about treatment of long-term versus short-term capital gains. You look at different holding strategies, especially in crypto. A lot of people are in this for the long term, but some people are actually doing swing trades and things of that nature. How does that play out for Coinledger? Do you guys identify that? What's the process?
Yeah, exactly. So as you mentioned, the IRS code kind of incentivizes long-term investment, and thus it gives favorable tax rates if you hold assets for greater than 1 year. And so this applies to cryptocurrencies. If you hold your Bitcoin for more than a year, you're exposed to long-term capital gains rates, which are anywhere from 0 to 20%, depending on the amount of income. Mm-hmm. And if you buy and sell within a year of an asset, that's simply ordinary income, which can be taxed as high as 37% currently.
Okay.
And so there is tax advantages of holding your assets for greater than a year. Coinledger automatically ingests this and can show you, the holding period, how long you've held your assets, so that you
Okay.
can do some tax planning, and decide, well, if I hold for one more month and then I want to sell, I'm actually going to reduce my taxes by up to, call it 15%, right?
Right.
And Coinledger is a good tool to help you identify where your tax lots are.
Yeah, for sure. Let's talk a little bit about the strategy that some people are doing, whether it's estate planning, businesses that are, maybe single member LLCs, or people that are out there saying, hey, maybe I should buy my crypto this way. How do you guys treat that when you have entities outside of just an individual? What do you guys do in terms of the program?
That's a great question. So Coinledger is pretty laser focused on retail cryptocurrency investors. So other folks, businesses, hedge funds, prop trading shops, they still oftentimes use platforms like Coinledger, but we're not tailored to really service them. So I'd say if you're running that type of entity, maybe better for you to talk to an accountant. You can still use our tools, but we really are focused on that retail investor and servicing them in multiple different ways.
Yeah. David, have you seen a bit of a shift within the accounting, industry that has started to tick up in terms of accountants? Because I know when we go out and talk with our CPAs, a lot of times we actually had to do a CPA change because they just weren't as well, not certified, but they just weren't well trained in understanding crypto and the blockchain. Are you finding more CPAs and accountants that are starting to maybe pick this up as a specialty area?
More than it was 5 years ago, when we first got started, but I'd still say it's a fairly niche industry where the demand for tax professionals is greater than the supply, right?
Yeah.
It's still imbalanced there. And, we have a network of good crypto tax professionals that we've vetted and we know. But I would still say there's many more people than they can even handle for their firms.
Sure. Yeah, for sure. We've talked to several of them just over the years in terms of interviews and stuff, getting kind of for businesses, but also, the opportunity for high net worth individuals to really kind of maximize their tax positions. So that's been a big one. When you look forward here for 2024, anything on the horizon right now that you guys are seeing from the IRS that says, all right, guys, you need to be preparing for next year, 25, for the 24 tax year, maybe a little differently? Anything that you guys know about?
The biggest item on the horizon doesn't have to do with the retail traders themselves. It's more businesses in the space, which it's made a lot of headlines, but the 1099 information reporting requirements that the brokers, aka the Coinbases of the world, are going to have to do on behalf of their users. Now, this does apply, and retail investors should be aware, because once Treasury and IRS officially put the stamp on the final regulations, millions of these 1099s reporting on any gains, capital gains or losses or disposals that are happening on the broker's platforms will start to be reported to the IRS every year. Just like if you receive a 1099 from your current stockbroker. And so
like Fidelity or somewhere like that. Yeah.
That's a big one that's been on the horizon. It's been all over the news, honestly, for the past 3 years. It's still not quite finalized, but within the next 2 years, those 1099s are going to start to be shipped out, and retail investors should expect to start receiving those. Obviously, this is a big enforcement mechanism that the IRS is using to track down who has income that they should be reporting to us.
Right. Well, it's just like any 1099. It's like whether you're an employee or a W-2 employee and you're out there doing gig work, or Postmates, Uber, you're getting 1099s from those companies, the same kind of scenario. So I could see it's a little different, but of course, for investment platforms, whether it's a Fidelity or, something like Charles Schwab, same kind of scenarios are coming in terms of tax reporting back over to you guys as well. So nothing really new in turn. What about I know FASB is more of a business side of things, but have you guys seen more, I guess, evidence of businesses now starting to go in this direction and just kind of coming to you guys for, guidance?
Yeah, I haven't seen it, but it's mostly likely because how we're positioned in the market, like you mentioned.
Right.
We actually don't do, call it like accounting software, which you could think of like QuickBooks for crypto
Right.
native
Yep.
businesses. But that's what you're alluding to, is the way you're actually accounting for these assets on your company's books.
Hmm.
There was a win there in that you can actually mark to market,
Yep.
which is going to show a more realistic balance sheet and what these assets are actually worth, which is a good thing. But I don't have a ton of insight into our businesses adopting this more as a result of that. I actually am not sure.
Yeah. Well, definitely, I would love to see more about this. For all you guys watching right now, make sure and check out Coinledger's website. They're a partner here at the channel, and we love to have them. We always promo Coinledger as one of our premium products here for tax season. So check it out. We'll leave a link down below for you to do that. Couple of things I would recommend is make sure and get started early. Number one, get it going, and then the whole idea, I think, of this kind of portfolio tracking, this could be a big deal for you guys. I think it will draw in more year-round use. So I would love to learn more about that. As you guys start to roll that out, let us know. We'll definitely
Yeah.
drop some links out to our audience and get going there. Anyway, David, it's always fun chatting with you, and we appreciate the time today. Thanks for stopping in.
Yeah, thanks so much. It's always good. And if anyone needs help with their taxes, just hit us up over at Coinledger, and we'll see you soon, Paul.
You bet. All right. You guys are, of course, maybe tuning in over the podcast side of things. Make sure and jump over to the YouTube channel, because this is where we'll give you a little bit more visual aid here on the show. And of course, if you're already subscribed, thank you very much. We hit 400K, so it's a big deal. But guess what? The way to really spread the news around crypto is to like a video. It's going to help other people kind of discover what's happening in this space. So make sure and do that. If you guys want to catch me out there on X, it's @PaulBaron. We'll catch you next time right here on TechPath.